Good afternoon, this is Sean Golden with Golding & Golding, here to discuss what you can do when you have unreported foreign income that has not been properly declared to the IRS and U.S. government. So it's not uncommon, in fact it's quite common, that U.S. persons with foreign income had no idea that they were supposed to report this information to the IRS. The U.S. is one of only two countries that does a citizenship-based worldwide income for its citizens and other U.S. persons. So basically, if you're a U.S. citizen, legal permanent resident, or foreign national who meets the substantial presence test, the baseline perspective is that you have to report your worldwide income. Doesn't matter if you live in the U.S., doesn't matter if you live overseas. You could live overseas in one country, earn income from a third country, and if you're a U.S. person, you still have to report all of this income to the U.S. government, even if you never stepped foot on U.S. soil for that year, unless you qualify for a treaty exception or the closer connection exception, things like that. There's lots of different types of income that may be reportable. You've got earned income, consulting income, royalty income, rental income, interest, dividends, capital gains, things like that. It's all reportable, right? There's no blanket exception for income that's not reportable to the U.S. government for U.S. persons. Depending on where you live, if you filed for an extension, the tax filing dates will vary. Generally April 15th. Unless you live overseas, you get an automatic extension to June. You can always apply for an extension again into October. And then if you live overseas, you may be able to get another 2-month extension until December. There are some common misconceptions when it comes to reporting foreign income. Baseline perspective, all foreign income is reportable, okay? Some people think it's not reportable because you only report U.S. income to the U.S. government and you report your foreign income to the foreign government. For some countries, that's probably true, and that would be the common sense way to do it. But the IRS doesn't really follow a common sense model, right? So basically, worldwide income, going back to the example I just gave before. Even if the income is tax-free or tax-exempt overseas, that doesn't mean that you get the same treatment here, especially if it's a non-treaty country. If it's a treaty country, you can always go through the treaty and see if there's any sort of treaty benefits that may reduce or minimize the taxation of that income, but baseline perspective is worldwide income. All income is taxable to individuals in the U.S. As a quick aside, today's focus is just on individuals. I'm not talking about corporations and things like that. Another very common misconception is that if the taxes are already withheld overseas, that either it's not reportable or you only report the net. First thing is, it's all reportable. Okay, doesn't matter if taxes were withheld. Second thing is, if taxes were withheld, you don't just report the net because you're doing yourself a disservice. You earned $1,000 of income overseas, they withheld $300, well that's $700. So some people think, well, I'm only going to report $700. There's no foreign tax credit in there. In fact, if you had the same tax rate in the U.S. on that money, then you take that $1,000 and you report it, but you also claim a foreign tax credit on Form 1116. At the end of the day, you may not owe any tax. So it's important to make sure you report the gross as well as foreign tax credit. Now, in addition to reporting the income, a lot of times the income is associated with foreign assets, accounts, and investments. These also have to be reported, and they're reported on a myriad of different forms. We have a ton of information about this on our website. Some of the common ones are the FBAR, Foreign Bank and Financial Account Reporting, FinCEN Form 114. You've got FATCA, Foreign Account Tax Compliance Act, Form 8938. You got Form 3520 for gifts and trusts, Form 3528 for foreign trusts, Form 5471 and 5472 for businesses and corporations, 8865 for partnerships, and it goes on from there. If you're out of compliance for not reporting either your foreign income, accounts, assets, or investments, and you want to get into compliance, there's lots of amnesty programs available. Try to steer clear of some of the fear-mongering garbage you'll find online. For the most part, you find yourself in one of these situations. You can normally safely get through the program by doing one of the offshore amnesty programs. There's voluntary disclosure for people who are willful or can't certify under penalty of perjury they're non-willful, streamlined domestic, streamlined offshore. There's reasonable cause and delinquency procedures. We have lots of free information available on our main website, goldenlawyers.com, and we have a bunch of sub-websites that identify each specific form or category of income to help you better understand and kind of focus each specific item, because it can be overwhelming. The FBAR can go on infinitely. So we have a website dedicated specifically to FBAR. If appropriate, feel free, email us, reach out to schedule a reduced fee initial consultation. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.